Welcome to Trade Pro. In this video, showing one of the most profitable strategies that I have tested, and this one is exploiting spikes over or under daily highs and lows with trend direction in mind. I'll test it 100 times in a row and see just how good it is and show the results at the end. So first, let's cover what I'm actually going to be testing, the indicator being used, and so on. All right, let's start by covering the indicators being used here. First one is called Daily High/Low by AVAVZFR. And all it's doing is marking the daily high and low each and every day with this line. So that's this blue line here on my chart. And we're going to be using this to look for sweeps on the highs or lows of previous days, depending on the trend direction. Okay, and that leads us into the trend direction indicators, which for this test, I'll be using a 200 period exponential moving average and a 50 period exponential moving average. If the 50 period exponential moving average is below the 200, then I'll be looking for sweeps on previous days highs to enter into a short position. And if the 50 period EMA is over the 200 EMA, then I'm looking for sweeps on previous days lows to get into a long position. So in order to kind of explain this test and strategy, let's go through a bunch of examples of what makes a winning setup and what makes a losing setup. All right, so here is an example for a short setup. Essentially what we're looking for is downtrend. So 50 period EMA under 200 EMA, as we see here. Then once we have trend direction, we'll be looking for sweeps on previous day's highs. So here we have the previous day. Here on this day, we sweep that high through here. And it actually happens 2 days in a row where highs are swept. And why is this a winning setup? Well, we're going to be looking for a short entry above previous day's highs. And we want to have at least a 1 to 2 risk to reward ratio. So this is an easily exploitable setup where even if we had the worst possible entry above the previous day's high, we easily get at least a 1 to 2 risk to reward ratio with a large move in our favor right after, and very low chance of getting stopped out on this setup. You can enter based on a few things, such as regular bearish divergence in a downtrend, so that would put you in somewhere up here. Or you could wait for a breakdown in structure where you wait for a bearish structure break, and that would put you in at a bit of a worse price, but you could put your stop loss a bit tighter. So that's the idea here with a short setup, looking for an easily exploitable 1 to 2 risk to reward ratio, and I'm considering it a winner if it's a clear, easy win with at least a 1 to 2 risk to reward ratio after sweeping the highs. It's a fake out, and we see continuation to the downside after sweeping previous day highs. Okay, so let's move on to the next setup. So again, downtrend, we're looking for sweeps on previous day's highs, and we don't have that until over here. So the area we're looking for a short is up here. And again, easily exploitable sweep on highs. It's a fake out. That's what's going to make it a winning setup where we want to get in above these previous day's highs. So it sweeps a couple of these days highs on this move. And then we get it as a fake out where we get a large move to the downside, easily exploitable with at least a 1 to 2 risk to reward ratio. So that's what I'm determining as a winning setup. Okay. To be clear, those are winning setups. And now let's move on to a losing setup, which we get next here. So now still in a downtrend, and we can wait again for previous day's highs to be swept. So we see that happen on this day where the highs are swept here on this move up, but we never get a fake out. It's a true breakout to the upside, and this is a loss. So it just continues up. Never get the fake out and continuation down. So this is a loss. This is not an easily exploitable setup with at least a 1 to 2 risk to reward ratio. So this is a losing setup. Okay, so hopefully you can get an idea of what I'm actually going to be testing 100 times in a row. We're going to be seeing how many of the sweeps on highs or lows are easily exploitable 1 to 2 risk to reward ratios, and how many are failures and just reversing the trend essentially. So let's go into some more examples so you can see what type of setups I'm classifying as winners and what I'm classifying as losers. So here is an example in an uptrend. So we have 50 period exponential moving average over the 200 period. So only looking for sweeps on previous day's lows. And we get that right here. So previous day low here. This is our sweep down below previous day's low, and it's a fake out. So this is success, easy 1 to 2 risk to reward ratio. And here, definitely not any chance you're going to be stopped out, whether you get your entry up here, or over here, or below. There's no way you're getting stopped out on this setup, targeting wherever current day's highs, previous day's highs. You can get a 1 to 2 risk to reward ratio many ways in here, but that's what I'm seeing. Is it a fake out or not? And this one is, yes, it's a fake out, break below previous day's lows. It's just a fake out before continuing the uptrend, right? So that would be classified as a winner. That's essentially what I'm testing. Is it a fake out or not? So let's move on in this uptrend. So here's another break down below previous day's lows, and it's a fake out. So we have lows here, pushes down, it's a fake out, okay? So it's an exploitable setup where we could take entry based on some factors that you determine are suited for you, whether it be regular bullish divergence, potentially bullish structure break on a lower time frame that you could find in here. So your entry would be somewhere in here, looking for that move up. Whatever it may be, it's an easily exploitable setup that you could pull at least a 1 to 2 risk to reward ratio out of. It's a fake out. So the breakout below these lows, it's just a stop hunt, and then we get a move up, okay? And then let's take a look here. Happens again. So here's lows, and here's our fake out. So easily exploitable, breaks below lows right here briefly, and then we get a move to the upside. So easily exploitable, nice move to the upside here. And again, uptrend, we have break below lows here. This one classified as a loss because this move down causes the cross down here. It does end up being a fake out, but this is too large. This move comes down too far, so I'm classifying that one as a loss. So just so you have an idea there. So we go back into an uptrend here. Here's clearly easily exploitable when break down below previous day's lows here, and we get the bounce here for a nice move to the upside, okay? So hopefully you're getting the point here. Easily exploitable with at least a 1 to 2 risk to reward ratio, and entering based on a variety of factors. But what I'm doing is testing how many of these are fake outs and how many of these are proper breakdowns in the trend, okay? So let's move on to the 100 back test and see what type of results this gets, how many times this works, how many times this fails. All right, results are in after the 100 back tested trades, so let's cover it. This one was tested on Bitcoin against the US dollar on a 30-minute time frame using a 1 to 2 risk to reward ratio. For the 100 back tests, it took 10 months of price data. Out of those 100, 63 were winners or exploitable setups that you could definitely have at least a 1 to 2 risk to reward ratio on. That's kind of what I've been testing here. So it's not exactly a set in stone strict strategy with exact rules, but I determined 63 out of those 100 were easily exploitable with at least a 1 to 2 risk to reward ratio. There were 37 outright losses there that I determined were not easy to take advantage of and have at least a 1 to 2 risk to reward ratio on. So out of those 100, biggest winning streak was 7, biggest losing streak 5. And overall, gain on the account, 89%. So assuming a 1% risk of your equity per trade and not compounding. So this one did incredibly well. And again, of course, these results are up for debate because it's not an exact strategy with exact rule set, but you can definitely achieve this type of result if you really practice this and develop a set of rules for this style of trading. So definitely a worthwhile strategy to look into and implement into your system. So let's put this on the strategy ranking spreadsheet and see how it stacks up against others. Definitely going to do really well. All right, here it is on the strategy ranking spreadsheet, falling out spot number 2 out of 100 back-tested strategies. And this one performing incredibly well, definitely comparable to the number 1 strategy, seeing as the amount of time it took for the 100 trades was far less at 10 months versus 11 years. 1 to 2 risk to reward ratio, 63% win rate. Of course, the highest out of any strategy I've tested on the channel so far. So definitely worth taking a look at and trying to build a system that utilizes this strategy idea. So thank you guys for watching, and make sure that you like the video, comment down below for YouTube algorithm, subscribe if you haven't, and check out links in the description for Patreon and affiliates. Thank you. Have a nice day.